Hello again, this is Alex with MasterChartsTrading.com, and this is market recap of Friday, March 23rd, 2018. So today's video will be somewhat different in the sense of I'll try to address a lot of questions that I've been getting about various aspects of trading, but one of the biggest ones is of course the news chatter and the way I deal with news and how I don't listen to news, but I do look at the charts, and I will tell you how I think of how the news is reflected in the charts. And sometimes it's difficult to tune out the news because it is sometimes scary. So that's a completely different subject. But to just stick to the charts is one of the ways to deal with the chatter. So let's look at this current charts, and the chart here is for S&P 500 futures on a daily time frame, and on this chart we have four lines: green, blue, red, and yellow. And you can find out more about these charts at my website at MasterChartsTrading.com. You can get the same charts on your or the same lines on your chart. Anyways, on this chart, what I'd like to point out is several resistance, two resistance touches here, one on the 26th and the 27th of February, and the second one, what I thought was a breakout actually, turned to a pretty strong resistance with a relatively strong selling into today basically. So very little buying here that I see at the very end of the day on the futures, but overall this is a clearly significant selling, and there is significant selling pressure that is present. So yes, there is weakness that is creeping into the market. I always, or rather, let me rephrase it. I wanted to point out this chart, and this is a chart of JNK. This is a high-yield corporate bond fund. So I looked at this chart as early as December 19, 2017, and I didn't really like this chart. I thought something was not right about this chart, and something was brewing under the surface, so I sent this out. But then we got a whipsaw, and this is like, okay, maybe we got a whipsaw, it's possible. But then I see this resistance, and we see this a lot of selling, and here I actually completely exited all of my positions in junk bonds, and then I'll show later the bond positions also. I had some positions in bonds, but I closed all of them out because of the behavior of this chart. I don't like the behavior of this chart. So we have a close below this yellow support line, and this in buying book is outright bearish behavior. So if I was hell-bent on shorting this chart, for example, back on the, I don't know, in early February, I could have shorted this chart, then I would be looking to short around this red line, and this is a red resistance line that you can download for yourself. So overall, this is a bearish chart. Why do I keep bringing up junk bonds? Is because we basically have high correlation between junk bonds and stocks. It's a significant correlation. We can look at the actual number. It's pretty significant. You can look at my old charts here on StockCharts.com. Great website, but the interactive component has been sort of missing, and the charts are static, and it's a bit difficult to update, unfortunately. And I used to spend a lot of time on this site, but of late I've been moving more towards TradingView.com. It's just more convenient. So here's that chart I'm referring to. This is a weekly chart of junk bonds. So each of the candlesticks here is 1 week's worth of activity, and here down below here is a 20-week correlation coefficient. Now you can see that vast majority of the time the correlation is positive. So in other words, when junk bonds go up, stock market also goes up, and then vice versa. When the junk market decides to drop, the stock market may also decide to drop. So this is what I'm trying to refer to on this chart, where I am basically warning my subscribers to stay out of this market. I personally am staying out of this market right now. I have no junk bond holdings, or for that matter, bond of the investment grade kind either, because I'm looking at this chart and it looks bad. It looks bearish to me. It looks like it wants to continue lower. And in fact, if I was betting on the continuation, I would short. I would bet that if we get a bounce to 36 bucks here, that would be a good level to open a fresh short for this one. But let's backtrack a little bit to the S&P 500. So here's mini futures. This overall is still a bullish chart, and I would only think about it being a bearish chart, or even dropping into a somewhat scary territory if we close below 25.31. Maybe next week or so. Will that happen? Nobody knows, obviously. Later on, if we continue lower, especially if we break 24.15, then I would become outright bearish. Stock market has a tendency to go up, so we have to be very careful with bear markets, because during the bear markets it's more difficult to short stocks than to open longs. On top of, during this bear markets, you probably don't want to be opening longs in either case. So overall, I'm sensing a significant amount of selling. It's pretty obvious. So let's go over the sectors. Here's XLK, the biggest sector, which is the technology sector currently in the stock market, and we can see significant selling towards this blue support line. But to me, since I think still that this is a bullish chart, this could be already an opportunity, and we could see a bounce higher, at the very least a small bounce higher. We can look at another sector, XLY. This is a also very economically sensitive sector. You can see that we're attempting, we broke below this blue line, which is a support line, and now we'll see where we go. Basically right now there is significant amount of selling, unstopped selling here on this chart. You can see the selling into the close of the day. You can see the candle being completely red, with sellers predominating. So it is a bearish candle, but this chart is bullish in general. So I would look to enter on the long side still. So overall, significant amount of selling. Is it going to push the stock market into a bear market? It's difficult to say. We can look at QQQ. And it's still a very strong chart. I mean, these are all-time highs just a few days ago, really. So all-time highs are by assumption basically very bullish, and until proven otherwise, we will continue treating the current oversold condition, and it's definitely an oversold condition, as a potential opportunity. Okay, let's move on to bonds. Here is bonds on a daily time frame, TLT, 20+ year Treasury bond fund. Up until relatively recently, I thought bonds were in an uptrend, up until February 1st of this year. Now I think they're in a downtrend, and I think they could be shorted here at 121. This is a relatively volatile security, so be that much more careful playing this instrument. In either case, right now bonds are in a downtrend, so we have AGG, aggregate bond fund, fresh lows, junk market, as I already pointed out, lows, approaching new lows, LQD, which is a investment grade corporate, investment grade corporate bonds, also at fresh lows for the move. Rebound is, likely, but will it occur? We don't know. So for now, I'm basically avoiding bonds. Here's TLT, and here recently, last week, in fact, I pointed out IYR real estate. In fact, I went as far as actually opening a position, and here is that inverse real estate position, DRV. So what happened here is, and here what I wanted to show, so you have multiple reasons why people don't succeed in the market, and I think number one is basically money management. You just opened way too big of positions than you can handle, and then you get wiped out, and then you wonder where did the money go. Number two, psychology. So you have to exit at your stop. You have to respect your stop. If you don't exit, that means you're breaking your system, and that's psychology. So it's a different kind of approach. So money management, psychology, and the system itself is actually not that important. I've seen systems that are basically random, and they do make money. So money management, psychology, it's quite important. So here, what I wanted to give an example is IYR and why you should not overthink a trade and trade the actual chart you're trading, not some other chart, and where extraneous information actually makes things worse. So here's IYR, and last week I said, okay, I would short it, and I actually shorted it here. I opened DRV, which is inverse real estate. I entered at 1340, and the trade a couple of days went in my favor. So on the 21st here, I'm looking at TLT, and TLT here, and it bounced, but now it's pulling back, and real estate and TLT, they move opposite to one another. So I am pretty happy, but then I see that TLT is dropping here, and I am thinking about my short in IYR, or rather, I'm sorry, I meant to say, I see here TLT all of a sudden jumped on the 22nd here, and I'm looking at my IYR, and I'm freaking out, and basically I got stopped out very tightly, and this is because of the overthinking. This chart, IYR, is clearly bearish, so basically all I needed to do is just do nothing and just sit in my inverse position and wait for the resolution. And what did I do? I started thinking about TLT, that it is bouncing here, and I'm gonna be wiped out because IYR real estate will react to the news of interest rates again dropping. So this is what I'm trying to say, is don't overthink this. Just look at the actual chart you're trading. It may be significantly helpful that way. Okay, the next step in generally successful practice of trading is, of course, psychology. And here I was a perfect example. I thought my recent trade in GIS, also known as General Mills. So let me show it to you. Let me show you the entire trade so that's kind of obvious. Back here on the 21st of December 2017, I'm thinking that we're seeing a breakout on this General Mills chart, and I go right ahead and I open at just on breakout. The trade kind of meanders right away. It's going against me here, so I'm not happy. I think I may have broken even or possibly. Yeah, here I really don't like this chart more and more, and I'm sending alerts. I'm gonna start sending alerts to my subscribers. Caution, definitely caution here. And the next day, actually, it closes below this yellow line, and my stop was a close below this yellow line, so I went ahead and I closed my position because this is what my stop is, and I calculated my position. If I enter here and I close here, what is the number of dollars I'm willing to lose? I was willing to lose about $9 or so per share. And I bought a corresponding number of shares. It's actually quite easy to do. You just take this tool right there, and it's called long position. And you just click it at the price level, and you pull it back to the stop. So my stop was 12%. About $7 in points. It goes against me, so I'm forced to exit. I close it right there, and then I send to subscribers the same thing. You know, I close my position, avoid it. Notice what happened afterwards. The same stock dropped another 13%. So if I somehow thought that, oh, but what if it goes up? I would have lost even more money. So take your lumps, or you'll pay twice, because we don't know. Maybe we're seeing a minor pullback, or maybe we're seeing a true reversal. And in this case, it was a true reversal, and we were lucky enough to get away with a relatively small loss. And in trading, it's always, you will have losses, because your system will never be 100% successful. My system is currently at 75% success rate with my targets, so your mileage will obviously vary. So this is just a very good example, I thought, of how to apply psychology of trading, and you have to just say, okay, I am done. I've been proven wrong, and this is very difficult for many people. Say that I've been proven wrong. Just exit. Yeah, it is the only thing you can do in this business. All right, so let's move on to the dollar. Here is DXY, excuse me, on a daily time frame. I mean, this chart, generally speaking, is bearish. Perhaps we're seeing bottoming sign, but with today's price action, I'm not so sure anymore. I was looking at US dollar versus Canadian dollar, and it looked very promising, like it's going to break out. It didn't break out yet, so we don't really know what's happening. As far as US dollar versus Japanese dollar, that also doesn't look like it has stopped falling, so we're still looking from the, at this chart from the point of view of the security being in a bear market. So far, dollar is under pressure from Australian dollar, New Zealand dollar. Although maybe there's some resistance here. AUD, USD, Australian dollar, one of the weakest ones versus US dollar. I mean, I'm sensing some sort of a reversal patterns, possibly, in the various components of the dollar. We'll see where it goes. So overall impression with the dollar, there's a possibility we're trying to bottom here, but look at this Japanese yen chart. Japanese yen is clearly in an uptrend here. So yeah, we'll see where this goes. Right now, just basically, when we look at euro versus US dollar, I mean, this is a bullish chart again, but I feel like it hasn't corrected enough to warrant a fresh long. I would look for a bigger correction, maybe like this British pound here towards the blue line here. But so that would imply that the dollar index overall will strengthen. So that, of course, is helpful to the precious metal XAU USD on the daily time frame. Nice big surge here. Notice we've seen bottoming action around this blue line here. So overall, this is a bullish chart. Gold miners. I don't know about this chart. I don't love it. You know, we have this support break here, and I don't see yet significant buying. I mean, there was some buying, but it got sold off by the end of the day. So I am not sure about gold, and I'm just staying out of it. So here's gold miners. Here's a junior gold miners on the daily time frame. Here, if you shorted exactly at the red line, you could have made money. Potentially already, people are shorting here. Yeah, so kind of difficult to read gold versus gold miners. Gold is upper right hand here, so pretty obviously stronger than the gold miners. Gold miners on the lower right hand here, so either gold miners will need to catch up to gold, or perhaps gold will need to correct towards the levels where the gold miners are currently trading. So I am basically staying out of precious metals for now, and telling the same to my subscribers at MasterCharts Trading. So I'm basically staying out of well, I mean, it's up to you, but I'm basically staying out of the gold and gold miners currently. All right, let's continue to oil. Here is light crude oil on a daily time frame. If you entered back on the 13th of February, then you had just a beautiful move, and if you held through this minor drawdown, in either case you are in a plus here. Oil currently looks to be in an uptrend. What worries me is the XLE, energy ETF, which, like the gold miners, also is under pressure. So you got all oil and kind of like oil miners and gold miners. So you have energy under pressure, XOM, ExxonMobil at fresh lows here, and with a failed breakout as recently as the January of this year. And this is one of the largest companies in the world. So if this thing is in a downtrend, now I start to wonder about oil. Kind of maybe it's overextended. We'll see. Unless we, of course, get a breakout to fresh highs, then yeah, oil could continue higher, sure. Here's natural gas futures in a daily time frame, and I pointed out this yellow arrow here on the 1st of March. So if I was trading the futures, I would already start thinking about shorting it here at the yellow line. And then notice that basically that's what we got. We got selling here, and potentially we're gonna make fresh lows here as well. So natural gas is definitely bearish currently. All right, let's continue to Bitcoin. So briefly, here is the cryptocurrency overview. These 4 lines here, again, you can find more information about them at MasterCharts Trading. You can have the same lines on your chart. Just ask me how. Here what I see is, I think this is a bearish instrument. So Bitcoin is currently bearish in my opinion. I would already shorted. So like for example here the 2 arrows, and these arrows were there in real time basically. So potentially you already could make some money from shorting, but it would be relatively tight. Um, I think ideally, well, obviously, we need to close below this red line and then push lower. So something like Ethereum. Here's a nice break on the 14th of March and then a nice push lower. So this is definitely enough to make money here. So Ethereum bearish. Also, I would short it. Litecoin kind of slightly stronger than Bitcoin, I guess. You can see it's hanging on here, but still bearish overall. I think I would short it as well. Here's XRP USD Ripple, also bearish. So overall, cryptocurrencies are in a bear market, and I would avoid them. Please head over to MasterChartsTrading.com. That's MasterChartsTrading.com. Click on alerts and indicators and sign up here. I'm offering a new thing here. You get to talk to me for 60 minutes if you want to. So after you sign up, send me an email. We can set up a chat session over the phone. Okay, that's it for this week's recap. Thank you for watching and have another great trading week. Bye-bye.